Hey everybody, this is Amy McRuddy, your premier real estateologist, coming to you from sunny Fort Lauderdale. Well, actually, I'm looking outside. It's not too sunny today, but it's still gorgeous. It's like in the 70s. It's the year 2025 and the month of November. Yeah. So I think it's in the high 70s, mid 70s. It's a beautiful November day in Fort Lauderdale. So today's video, I am going to talk to you about one of my favorite subjects, real estate tax exemptions and portability. This is so important, and I can't tell you how many people just don't even talk about it. So whether you use me as your realtor or you have a realtor that you know, love, and trust, remind them to remind you to file for those real estate tax exemptions and portability if it applies. So let's start first and talk about real estate taxes. Okay, so we don't have state taxes on our employment and a whole lot of things. Yay for us in Florida, but we do have real estate taxes. They're getting high. A lot of people are complaining about them lately, but you know what? Everything's expensive, especially running school systems and taking care of roads and lights, exterior lights, street lights, and all the things that civilized communities have to pay for to keep their community pretty and safe and all the fabulous things. So we need to collect money to do that from somewhere. And where does that come from? A lot of it from our real estate taxes. So all things considered, if you look at some other states like California, our taxes are pretty cheap compared to theirs. Stay tuned, because I have a video coming up about Florida versus California. But for now, I just want to talk to you about the Florida real estate taxes. So the first thing that you want to remember when you're purchasing a property in Florida, and if you haven't done this when you purchased it and you already own one, get on this now. You need to look into your homestead exemption. So your homestead exemption applies if it is your intent to reside in the property as your primary residence. And if that isn't your intent, so it can't be a second home, it can't be a vacation home, it can't be commercial property, those do not qualify for homestead exemption. Only the home to which you intend to reside as your permanent residence. Now, that word intend to reside is pretty important, right? Because maybe you're in the movie industry and you work a lot in LA, but you go there for work, or you work a lot in New Orleans, or you work a lot in Eastern Europe, where a lot of the movies are being shot now. If you're going there for work and you're working there 9 months out of the year, but it's your intent to reside in your Florida house as your permanent residence, you get that homestead exemption. There's no requirement that you be there for a certain number of days a year or anything like that. It's your intent in your head. So that's an important distinction, and it's one that in the past, when I was practicing law, I handled problems that my clients had with the tax appraiser because of the homestead exemption. Because it is a criminal offense to claim property as homestead if it's not your homestead. So don't play with this. If you have a property and you rent it out, your tenants could rat you out if you use platforms like Airbnb or VRBO or any kind of rental platform. Believe me, those property appraisers, they can see those platforms very easily, and they look at them. They're not stupid. They're smart people that are doing their job and making sure that the people that are allowed to have the exemption get the exemption, and making sure that other people don't game the system. So that example that I gave to you about maybe you're in the movie industry and you work in LA or episodic television or something, that was a true matter that came up when I practiced law, and I represented the property owner who lived in California for like 9 months out of the year. And she would rent out like a little, or she let a friend of hers live in her house to take care of it while she was working in LA. And somehow the property appraiser got a hold of her and said that, she was committing a crime and she shouldn't have done the homestead exemption. But I went in, represented her, proved that. How do you prove it, right? She signed an affidavit that it was her intent to keep this property and to reside in this property as her primary residence. And that was honest and truthful. So she didn't lose the property, the homestead exemption, and she didn't get in trouble. But a lot of people try to game the system. Don't be that guy, because if they catch you, it's not pretty. There's fines and criminal penalties, whatever. I mean, technically it's a crime, but you're not going to go to jail for years over it. But you don't want a criminal record, and you don't want to hire a criminal attorney, and you don't want any of those things. So, okay, back to the legitimate part of homestead exemption. So basically, your homestead exemption, I can't memorize this stuff, so I'm gonna look at my notes. Put on my glasses. You're entitled to the homestead exemption if it's your intent to reside there as your primary residence. So every county's property appraiser in Florida they assess the value of your home on January 1st of every year. And that you pay taxes based on that assessed value by them. It's usually less than the fair market value. Nonetheless, there is a number assigned by the property appraiser's office as to the value of your home, and then you're taxed on that. So if it's commercial property or income producing property or not your homestead, you just pay the taxes based on that assessed value. If you disagree with that assessed value by the property appraiser's office, there is a method of contesting that in front of the property valuation board. So some people it's the value adjustment board, the VAB. Some people go and represent themselves. I usually hire a company that does that for a living, and I give them a percentage of what they save me. And on my commercial properties, they usually save me money on my taxes every 2 or 3 years. And then at least that's a way of me keeping them, correcting them, because it goes up, up. I hire the people, goes down, goes back up. But I'm just kind of working in this frame instead of ignoring them and just listening to the property appraiser. Your taxes could go up, so don't ignore that. It's like a lease, you know what I mean? Don't let that cost of living increase just keep on going until you think you're living in Manhattan and renting in Manhattan, when you really should be wherever that market is, in my instance, Florida. So anyway, I digress. So at the beginning of the year, they assess the value of your property. If you're entitled to the homestead exemption, you get up to $50,000 exemption. So the first $25,000 applies to all your property taxes, including the school taxes. The second $25,000 exemption applies to the portion that's not school taxes. So that's the utilities and all the other parts of a tax bill. Now that doesn't mean you get $25,000 off on your taxes. It just means if they value your property at $200,000, I'm going to pick easy numbers, then without the exemption, you'd pay taxes on $200,000 based upon the millage rate in your county. If you have the homestead exemption, you pay taxes on $150,000, because 25 and 25, but the 25 will break out differently. And if you want to look at like a trim notice or how they calculate that, hit me up by phone, WhatsApp, email. I'm happy to give you a sample and drill down deeper. But I could do like a whole hour on that alone. So if you want to do a whole hour on that alone, call me, message me, text me. I'm happy to talk about it, because I'm telling you, I love this stuff. Anyway, so that's the overall thing. So you got your homestead exemption, your property's value at $200. If you get the homestead, you're going to pay taxes on $150 instead of $200. That's really it. And that could save you, though, hundreds or thousands of dollars a year, depending upon the value of your property, because it's all a millage rate. It's a fancy way of saying a percentage of the value. The other cool thing about homestead exemption is a little side piece that comes along with it is that you get the Save Our Homes cap with it. So once you get the homestead exemption, then you get a Save Our Homes cap as a Florida resident. So your taxes cannot be increased any more than 3% per year on your homestead. Because if you don't have homestead, your taxes could increase by 10% in a year. With homestead, the maximum they can increase is 3% per year. Now, if you own a house for like 20 years, 30 years, 40 years, that's a big deal. I mean, I have people that are living in houses that they bought for like, I don't know, $80,000 in the 80s. And now that property's worth about $800,000. Their taxes are super cheap compared to their neighbor that just bought an $800,000 house last year because they have that Save Our Homes cap. So you can only go up 3% a year, and that's a big deal. And then the cool thing about it is when they sell their house, if they stay in Florida and buy another one, they can carry that low tax rate over to their new property and get a credit for that and retain the Save Our Homes cap, and also reduce if they move into one of those $800,000 homes that are taxed at some, I don't know, $15,000 or something now. If they take the portability at their little $4,000 property taxes, they might be able to get that $800,000 house taxed at about maybe $8,000 a year or less, $6,000 a year, because of that portability. It's just math. You plug the numbers in, and I'll show you later that you can do that on the property websites. The tax appraiser helps us calculate what they're doing. It's the sunshine laws in Florida, which is a requirement under our Constitution to be transparent with the citizens of the state. And it's a great piece that brings the tax appraisers into compliance with the sunshine laws, that allows us to just plug in on their websites the numbers and figure out what our taxes are going to be. We'll go over that later. So don't go off this video yet, or skim through if you want. When you see that Broward County Property Tax Appraiser website, stop and look at it. It's pretty cool. All right, but before we get to that, I want to go, so the Save Our Homes cap is adjacent to the homestead tax. Now, the big thing on that is to get that homestead tax exemption, when are you going to see it? So your deadline to file is March 1st of the year after you buy the house. So for instance, right now I'm in November of 2025. If I buy a house this month, let's say I close on a house November 15, 2025, I need to close on that house before December 31st of 2025, which we're doing by closing on November 15th. But then I need to apply for the exemption by March 1st of 2026 to get the homestead exemption in 2026, because taxes are paid in arrears. So the bill comes out on November 1st. Let's say I'm going to pick 2025 again. Bill comes out November 1st, 2025. You're paying taxes that came due from January 1st, 2025 through December 31st, 2025. So that's done already by November 15th. That 2025 bill is out. That's what it is. Whether the current owners are in homestead or not, that's what it is. But now you as the buyer, if you want to get the exemption for next November, you must apply for the homestead exemption by March 1st, 2026. If you miss that exemption, I think you're pretty much screwed. I don't know any way around it. There may be a way around it that I'm not aware of. And if you're in that situation, come March or April of next year, call an attorney or call those value adjustment board people that work with them, or just call me and I'll hook you up. I'll recommend someone to you. But the point is, it's November. So if you're thinking of buying a property and you haven't yet in Florida and you want that homestead exemption because it's going to be your intent to reside here, then don't forget, close before the 31st. So that's a big thing too, right? If you have a closing scheduled as a buyer for December 28th, and then the seller wants an extension into January, don't do it, man, because you're going to lose another year you're going to lose 2026 homestead exemption. You have to close by December 31st, and you have to file the form, which is either online or in person, by March 1st. So those are important deadlines to remember. Other than that, the homestead exemption is fabulous. There's also another few other terrific reasons to have homestead exemption, which is why a lot of people move to Florida. Your homestead exemption is completely exempt. There are also other benefits to having that tax homestead exemption and intending to reside in Florida as your primary residence, because it's exempt from creditors. Nobody can foreclose on your homestead except for your mortgage company and the tax collector. Let me see, and some criminal judgments. It's exempt in bankruptcy. So if you end up filing a bankruptcy and your only asset is your house, you keep in that house as long as you make your mortgage payment, pay your taxes. But I digressed again. I told you I love this stuff. I hope I'm not confusing you. I'll summarize now and just say the homestead tax exemption allows you up to $50,000 of exemption of the value of your property from the property appraiser, as long as it's your intent to reside in that property as your primary residence. It's pretty simple. And just hit the deadlines and you have it. And you don't have to renew it every year. Once you get the exemption, you keep the exemption. But once you move, or once you start renting that property out, you're going to lose the exemption, and you are obligated under law to disclose that to the property appraiser. A lot of people don't, and they don't at their peril. We already talked about what the issues are there. Then there are additional exemptions. So the homestead exemption is the biggie, but a lot of people forget about the additional exemptions too. So just know that there are additional exemptions. They are for senior citizens who make under a certain amount of money. So senior citizen is defined in the statute, or in the exemption statute, as someone being 65 years or older. So if you're over 65 and you make currently under $36,000 a year, you'll get an additional senior citizen exemption. Some counties offer up to a $50,000 additional exemption. South Florida, it's not that high. I mean, Broward County, which I'm most familiar with, it's not that high, but that's big. So now your $200,000 home with homestead value taxed at $150, now it could be taxed at $100. And then you have the widow and widower exemption. So if you're a widow or a widower and not remarried, then you get an additional $5,000 exemption off the appraised value. There are disability exemptions. You have to prove them, but if you're disabled, that's pretty easy to do. They have the total and permanent disability exemption, and that is a full exemption from property taxes. That's huge. And if you're fully disabled and you don't know that, you better get busy and get over to the tax appraiser's office and start getting rid of your property taxes. Blind or disabled persons, partially disabled, $5,000 exemption. Veterans exemptions, there are a couple of layers to that as well. There are service-connected total or permanent disability, complete tax exemption. So again, if you are a permanently disabled vet that from a service-connected disability, you better get down to the tax appraiser's office and get rid of those taxes right now. If you have a partial disability, 10% or more, $5,000 reduction. And if you are a deployed service member, there's a percentage off based upon how long you were deployed. And then there's the last little special one is the surviving spouse of a first responder. If your spouse died in the line of duty, like a law enforcement officer or a firefighter, you may qualify for a full tax exemption. So those are the exemptions in a nutshell in Florida. Now I'm going to move over to portability. Portability is I get a little example here. So let's say you've been living in your home for years, like 20 years, 30 years, 40 years. And thanks to the Save Our Homes cap, your taxes have only gone up just a little bit every year. Then you can transfer that lower tax when you move up to another Florida home. I'll show you the calculator when we look on the thing. But in order to get the portability, there are some deadlines and some requirements. You have to establish your new homestead within 2 years of January 1st of the year that you abandoned your own homestead. So if you sold your homestead and then you went and traveled for a while, or you went and rented for a while, you better buy a new place if you want the portability within 2 years of when you sold the other home. So you got 2 years to reinvest, basically. And then you must file the transfer of homestead form and do a new homestead application. The clerks will help you through that. You can even do it online. So here's an example. If your old home had a market value of $600,000 but was taxed at $400,000, then your portability difference is $200,000. You can take that savings to your new home, reducing its assessed value by $200,000. So if your new home is more expensive, you can transfer the full difference, that $200,000, up to $500,000. That's the cap. If your new home is less expensive, you can transfer a proportional amount. And again, the clerks will help you figure it out. Okay, so I'm sharing my screen with you from the Broward County Property Appraiser. Let me show you how easy this is. There's a Senior Citizens tab. If you're a senior citizen, you can go in there. There's Homestead and other exemptions. If you can see it on here. There's the home buyer's tax estimator and the portability estimator. So look at that. Let's go to the home buyer's tax estimator. Forget about portability. Let's just look at, you're moving to Florida and you're buying a house and you want to have an idea of what the taxes will be, because if you're buying a house for, let's say, $800,000, but the people before you bought it 20 years ago for $180,000 and they've had to save our homes, they have low taxes. So you cannot count on those low taxes transferring over to you. You're going to have to pay your taxes based upon the purchase price. So I'm just selecting a city. I'm selecting Fort Lauderdale. I'm going to enter a purchase price. 800,000? Yep. Okay, so let's calculate. No exemptions. 800,000, your taxes would be, so almost $15,000 a year for an $800,000 piece of property without exemptions. Let's just click Homestead Exemption and see what that does. Homestead, recalculate, $13,996. It's still $1,000-ish. It's better in your pocket than the tax collector's pocket. What if you're a widowed person? It goes down a little bit. And you see it goes through all the exemptions here. The tax collector does. So just go down and say, am I widowed? Am I a disabled veteran? And then it tells you what you need. Veteran service-connected total and permanent disability exemption. Watch, boom, 0. Senior disabled combat wounded veteran exemption, must be at least age 65, have a VA disability rating of at least 10%, and provide proof of combat injury. And then you have to do that. So let's say it's like 80% disabled. Calculate, your taxes would be $27.99 a year. So these can make huge differences. And you've served our country and you got hurt and injured and disabled because of it, take it. But anyway, so that's kind of it. Now if I go up to the top and I go back to the portability estimator, this is for people that already live here. Let's say for the year it tells you the year you sold, moved from the property, or otherwise canceled the homestead. Okay, so let's say I'm selling my house in 2025. Let's say that the just value on that house is $1 million. And that comes off of your old tax bill. You'll go in there and you'll just find the 2025 just value off your 2025 tax bill and you insert the number. Now the 2025 Save Our Home value, let's call that $900,000. Now your new home sale price, let's call it $2 million. We might as well dream big. You know what? Actually, I want to do this on the 800. Let's go back here and let's just do that 2025 just value on the house that you sold. Let's say you let's keep it at $1 million. and to save our home at $900. That's adjust value. That's not what you're paying taxes on. But then you buy a place. Let's say you buy an $800,000 home. Now we just saw that if you bought an $800,000 home, you'd pay about $15,000 a year. But if you sold something for $1 million, buying something for $800 with homestead exemption and portability, I'm in the portability, yeah. So don't forget about the tax estimator, your portability estimator, all the other exemptions that you have. It tells you how to do it. And don't forget to look for this stuff. You can also go to Miami-Dade. So I just finished showing you just an overview of the Broward County, which is where Fort Lauderdale, Plantation, Davie, and all those towns are. They have a fantastic website that lets you do a property search, has articles, information of interest to senior citizens, homestead and all exemptions, tax estimator, portability estimator. Now, that's bcpa.net, Broward County Property Appraiser.net. Dade County has the same thing. Same thing, online services to tell you what to do and how to do it and give you all the forms, the exemptions and the benefits, the property assessments. So they run through the same information under the sunshine laws. That's Miami, Dade, and then Palm Beach has the same thing. So like every county in Florida, there are 67 of them, they all have a property appraiser website. So you can get that information from the county property appraiser websites. So to recap, we've got homestead exemption, we've got all the other exemptions, disabled, widow, surviving spouse of fireman or a police officer or a civil servant, etc. Partial disability, full disability, a lot of them. Just go to the website, look them up. If you're entitled to claim the exemption, claim it. Don't leave any money on the table. Even if it's a couple $100, you know, it'll take you out to a fancy dinner. So you have that exemption. You have portability to worry about. You're just going to go to the portability estimator, plug in your numbers, and see what the estimated tax savings are for you. Then there's the deadlines. So just remember, March 1st is the deadline for new homestead exemption and portability. The forms are online, and if you have trouble finding those forms, just reach out to your realtor, reach out to me, reach out to your attorney. We can get those for you easily. You have to fill them out. You got to file them by March 1st. And then you can file those forms either online or you can go to the property appraiser's office and fill them out there. Now you will have required documentation in order to claim your homestead. So here's what you're going to need. You're going to need to get your Florida driver's license with your new property address on it. You're going to need to have either a Florida voter registration card with your new property address on it, or your vehicle registration with your new property address on it, and proof of residency, like an electric bill, a water bill, a bill that proves that you live at that property. So that's it. Florida driver's license, voter ID or car registration, and the utility bill. So start saving those and start changing your address as soon as you buy a property, especially if you're running close. Well, you're not going to run close to the March 1st deadline because you're going to close by December 31st. So you're going to have 3 months to get this done. You can do it. Now, I think that's really it. Let me see. So in summary, if you qualify for any exemptions, you must file on time and with the right forms. And if you're selling and buying a property in Florida, don't forget about your portability exemption. It could be huge. If you have any questions about how this applies to your situation, or if you're thinking of buying or selling anywhere in Florida, primarily if you want me, in the Fort Lauderdale, North Miami area, all the way down to the Keys or up to Boca, I'm happy to help you. I'm happy to help you and talk about this stuff anyway. I'm happy to talk to your realtor. I'm happy to talk to your lawyer. I'm happy. I'm just always happy, and I'm happy to talk about this stuff. So anyway, don't forget, I'm Amy McGrady, your real estateologist. I practiced real estate law in Florida for 30 years. Took some time off, grew my dreadlocks, traveled a little bit, went back to the practice of law, really wasn't into it with a big firm. And then I decided to just go out and sell real estate because that's what I love to do. I love all things real estate. I'm tired of being in the office, so I'm out of the office, into the streets, but I still have all that knowledge in my head, and I still have that attitude of protecting you. So call me if you have any questions on this, or hit me up on YouTube or any of the things. Well, yeah, YouTube in the comments, but I respond fastest to texts. But if you want to email me, I will certainly get back to you. If you want to call me, WhatsApp me, I'm happy to do it as well. So really, yeah, that's it. I hope we made this kind of dry subject to many a little bit interesting. It's kind of hard to make it interesting, but I will tell you it's very important, and I know about it. So you call me if you have any questions about it. I can break it down. Don't forget about it. Homestead exemption, other tax exemptions on your real estate, and portability. Those are the main things we talked about in this video. I thank you for listening, and I bid you adieu. Says.